Good morning, everyone. And stocks got a little bit heavy in the US overnight. We saw some interesting data out of Germany. We saw their trade surplus continue to weaken. And really, that weakening trade surplus, well, it says that Europe it's kind of losing its momentum for that amazing gravy train and wealth creation for the region that came out of huge, wonderful product trade surpluses, and of course their banking industry, but also of course their tourism industry. So Europe, I think, is going into a fresh wave of concern. I'll just give you a little bit of a view of the yacht going out, because that's important to get the markets right today. Yes, so another tough day in the office here. Now, look, oil was looking like a big rally, as were stocks. I think currencies are developing a different flavor at the moment. Stock market, I think you can be reasonably aware and concerned that this is the right-hand shoulder of a head and shoulders formation in tech speak, technical analysis speak. And of course, if it doesn't happen now, the big collapse that'll happen next year, as a friend pointed out to me this morning. Good morning, Peter. But I do think, and why I'm yelling from the rooftops and from the rocks and from the cliff tops, is this could be the ultimate top's already been seen in US equities. And this is the volatility after the first initial sell-off before we eventually head south in a more sustained fashion. And I would be doing you a disservice of not telling you so. The NASDAQ particularly weak, but all across the board now, US equities, you'd have to say the people who rushed in and bought the buying opportunity will be now a little bit more cautious about buying more, at the same time as those who think there's a reason to sell actually begin to sell more to take advantage of liquidity while it is still there in the market. So I'm seeing a risk of larger and larger funds beginning to offload a portion of their portfolios. And yeah, as a bear, I'm actually a little bit excited by the price action of the last 2 days. Remember a day or two ago, I said we'll have 24 hours more of upside, and then we'll have 24 to 72 hours of downside. And now we're in that downside sort of cycle. Markets have waves, both in time and price. And I think the market looks very heavy here. It's hard to see any new startling news coming out to lift the market to new highs. Perhaps if someone came out, the CDC or the World Health Organization, and said, Omicron is actually really good, it doesn't hurt you very much, and it's going to take over, and vaccines work. But so far the research is showing you can have very serious illness with Omicron. No deaths, touch wood, as yet. But it is early days and it could mature more slowly in terms of serious health effects. Too early to know about long COVID with Omicron, of course. It's only been around for a few weeks that we know of. But it is spreading very, very quickly around the world and in areas within the world. And that should be of concern to everyone. And there is a hospitalization surge in South Africa. About half of that is Delta and about 40%, 44% I think it is Omicron. So it can send you to hospital. The latest research out of the US, and this isn't the final research, it's not the final say, but it is suggesting that Omicron is resilient to the first 2 shots of vaccines. It can break through 2 shots. The booster shot, the initial research is showing the booster shot will actually have a big impact on it. But the 2-shot vaccination status is certainly a breakthrough risk, as is having previously had COVID, with Omicron having 3 times the reinfection rate of Delta, which was already a bit of a lift up. So that is of concern. So the world is exposed, but does it really matter? Should we stay open anyway? And probably we should, because we need to build herd immunity to these things. As I've said previously, the chap at Oxford University in the UK who co-developed Astra said very early on that herd immunity by vaccination was a myth. But it is giving us, vaccinations are giving us that time for herd immunity to develop. So I do have to talk a little bit about that because that really is a big impact on government policy, lockdowns, and strains on the health system going forward. And that will all determine the economic outlook, not just in the USA or Europe, but in Australia and elsewhere also. Economically, right, China is slowing. There's no doubt about that. Europe is slowing again, no doubt. The US had the slowdown I forecast. It started to pick up the pace a little bit. Whether that pace will be maintained or not. In the US last night, in terms of data, we saw new jobless claims fall to a 52-year low or something, still above the 200,000 mark. But that just goes to show it. And to be honest, that's really worrying me because it means that you've got now about 5 million fewer workers in the US, not 3 as it had I thought it was the case. Fewer workers than before the pandemic. You're having mass resignations. You're having people moving home to regional centres. And this whole shift in these generations, the next couple of generations, toward working from home, having your own business instead of working for an employer, it really forgets just how much a big company helps you. Legal, compliance, technical, morale, all sorts of things. So I think there's some pain down the road for some of these people, which I am concerned about, as they're being told you'll live happily ever after sort of stories by various people at the moment. But my point is, for the US economy, there's a whole lot of people who aren't in the workforce and they're not looking. They're not applying for new jobless claims, but there's massive amounts of people without jobs. That's a real worry for the US economy going forward. Now, coming back to the Australian situation, we have the bizarre situation where New South Wales is opening up next week fully, no restrictions basically, whereas Queensland, with no real single-digit cases, if any, is about to force 20% of its adult population into isolation in terms of retail, hospitality, government facilities, unless they are fully vaccinated. So Queensland reaching 80% vaccination means 20% of the adult population is unvaccinated, and they are now going to be alienated from society with no end date. And that's not going to be good for people's mental health, for their morale, and it's not going to be good for the Queensland economy. Obviously, counteracting that is this flood of people returning to Queensland. Oh, Queenslanders are now allowed back into Queensland sort of thing, or at least their relatives. And also the tourism trade, of course, at this time of year, which is the political will to do that. But this whole idea that with hardly any cases, you're going to isolate 20% of your population just because they haven't done what you wanted, which is to get vaccinated, is not a healthy economic policy at all. I also think it's inhumane and a touch inappropriate, pro-vaccination, but also I think people have a right to how they look after themselves and a personal responsibility. So Queensland's a very odd case, and what it means is a lot of people will be holidaying from Victoria and New South Wales to Queensland. It will get a boost. It'll get a drag from 20% of people being isolated from society virtually, and then from shopping anyway and hospitality. So Queensland's going to be a mixed bag. New South Wales, Victoria could really have a little bit of a slowdown more than usual at this time of year as people really seize the opportunity to head north on this occasion. So the Australian economy as a whole is still very much a mixed bag, which with South Australia, Western Australia out there having probably as good a time as you can, and our external trade situation is deteriorating. So, sorry, been holding the phone too long. The external trade situation is deteriorating, and I just really think the Australian economy is in a lot of trouble. As we head into next year's election, I think there could easily be changes of government with just people being generally frustrated, or a little bit, some sectors of society are going to be a little bit upset that we've lost our friendship with China. That will weigh. I know it will get a lot of votes as well, but it will also lose some votes. So we could be facing a change of government when we have a below trend economy with a central bank that absolutely has to be raising interest rates this year. So 2022 is a difficult year ahead, and the Australian stock market's definitely been underperforming. The Australian stock market will be very vulnerable if this US downturn happens. So what I'm seeing in the stock price action is that we're at the top of a right-hand shoulder of a head and shoulders formation for US equities, something to keep a mind on. The US dollar's been strong, it's consolidating. I'm not sure if it has much legs left in it to the upside in the short term. In the long term I do, but not necessarily in the short term. And therefore this Australian dollar bounce could just be sustained here in a consolidation period. If at any time the euro, the Australian dollar begin to make a new low, they would become a whole new fresh sell signal. Gold, I've been saying buy gold for a long time, but gold in the short term does look a little bit heavy, and I'd just be a little bit careful about adding just here at the moment and just take a bit of a watch and see approach. Clifford Bennett, Chief Economist, ACY Securities, thank you very much. I'll show you the view one more last time. There is a diver out there, but you can't quite see him. It's a beautiful morning in Australia. I hope you have a fabulous day and a really wonderful weekend ahead full of surprising, good surprises. Thank you very much. Clifford Bennett.